Money was made to be enjoyed, but with excellent management and understanding of the essentials to save. Stay until the end of this video because I'm going to teach you 4 super saving methods to achieve all your financial goals. Hi there YouTube friends, welcome to my channel. Let's get started. Saving is an excellent tool to meet financial goals such as traveling, buying a house, or a car, saving for retirement, and more. All those things we want to achieve so much, but sometimes saving is directly related to emergencies, so it's better to be prepared than go into debt. Saving is not only for bad things, in fact, it's also seen when we want to achieve a financial goal and face some expenses. For example, with the education of the children, education is increasing, but with planning and commitment, it can be ensured that children can graduate from a college without debts, or even those who are getting married know that this event has its costs. But saving money early will help this not be so heavy on the pocket. These are some examples of when we can save and achieve these goals. Therefore, starting to save money sooner rather than later will put time on your side because the savings will add up over time, and understanding this will lead you to scale your financial growth to take steps and then be able to invest part of the money that you save. Among the best saving methods is in the first place the Kakeibo, which comes from Japan and the word means account book. With this, the Japanese have managed to save a lot of money. Basically, it consists of writing down absolutely everything that is spent by categories, but how to do it? The first thing to do is to start monthly monitoring of all your expenses to identify which are necessary and which are just expenses, which are not necessarily vital. The first step is to decide if you will do it in a physical notebook or an application. For example, if you are going to do it physically, the second step is to separate the fixed monthly expenses, that is, those that we will never be able to stop paying. Then we decide how much money we are going to save, so that we are clear about the amount from the beginning and that it is not what we have left over for savings at the end of the month. So, once this is ready, we proceed to elaborate a budget, and then we subtract the fixed expenses from the income to distinguish how much money we have. Finally, we must write down the diary of all the expenses we have every day, and we are going to assign these expenses in categories. For example, food in blue color, and depending on the expense, you highlight it with a specific color. Other categories can be transportation, housing, personal care, maintenance, etc. All this is in order to have an overall balance at the end of the month of how your expenses are behaving. On the other hand, if you decide to do it through an application, this will be done automatically. However, I recommend that you write it down so that you are aware of what your expenses are. Now, the second method is the Pareto method, which is a law based on allocating limited time and resources to the tasks that produce the most results. Specifically, this law explains that 80% of the consequences come from 20% of the actions. Without a doubt, this principle applies to many fields, but also in the area of finance. In fact, it has worked very well when it comes to saving. It is important that we identify the decisions that have the greatest impact. Of course, to identify these actions we must follow up as in the previous method, review bank statements, and identify the areas in which we are spending a significant amount of our income, which in this case would be 80%. Identifying them and figuring out how to reduce their impact are the next steps. This will include housing, healthcare, transportation, and debts for the vast majority of people. Today I want to tell you that it is possible to reduce the financial burden. We start with 100% of the income, then we are going to separate that 80% for monthly expenses of all kinds, and the other 20% we are going to dedicate to save. The principle is based on focusing on the small decisions that have a significant impact on areas of growth. The third method is the 52-week money challenge. It is very simple and it has good results. Compared to the previous ones, it is more relaxed in terms of processes since we do not have to look at income and expenses, but to start executing it. It is necessary to clarify why it is called that way. The year has 52 weeks and that will be the time in which we are going to save. Then to start it is only necessary to decide when we are going to do it. For example, if we start this May we will finish in May 2024, but how is it working and how much you save? The idea is that week by week you increase what you start to save, on the first week you have to save $1, in the following week $2, in the third week $3, and so on until you reach week 52. I recommend that in order not to lose yourself in the counting, you can search the internet for the calendar or challenge 52 weeks and print it to cross out the goals achieved. The instrument can vary depending on your comfort. If you are more of a piggy bank, do it like this, but if you are also more digital, it may work with certain wallets banks. Additionally, you can use automatic save, and at the end of this exercise, if you do it very committed, you will have $1,378. That is an amount that you can use for an activity or project that you prefer. The last and fourth method is an automatic savings plan. If you are one of those who are very tempted to spend what is saved, this is the right method for you. The amount to save is chosen by you according to your capacity. This process is carried out in partnership with the banks, but it is you who chooses both the amount and the duration. Most are for a minimum of 3 months and up. Another benefit is that you do not have to worry about separating the money because it is automatically transferred to the programmed savings account, and also for your good compliance you can earn some profitability. Depending on the entity, you will not be able to withdraw the money before the established time. In part, this is positive since, as I said, you will not be tempted to spend it before the time. The requirements are very basic, and also when you open this type of account, it's exempt from the bank's administrative charges in some cases. Some essential tips when it comes to starting to save, whatever method you choose, is that you make the applications your allies. Many do the work for us and allow us to automate this process to make it very simple. Also try the 24-hour rule, which is based on the fact that if you have a craving to buy something, one of those cravings that happen to all of us, what you do is wait for 24 hours to pass and then consider if it's completely necessary or if it was just an impulse, and above all, live under budget. Within your own budget, you can also set aside a percentage for savings. The important thing is that you start and take this first step. So far this video, if you liked it, don't forget to give this video a big thumbs up, hit the subscribe button down below and the notification bell to not miss any video. Thanks for watching, bye.